right, let's do a very quick breakdown on that EU long that you could have taken today. So basically what we'd be looking at is, if we look at EU, we're in, a massive range. We're really looking for key areas to be trading from. As we can see that we're more or less in this bullish structure. So we're going to see a lot of reactions at the equilibrium. We're going to be wanting to see more trades within the discount. But the big and most important thing to look for is we need to find areas that you could look for potential buys in this case, because we are kind of in that lower quadrant. If we're looking at structure here, we can see that we are putting in bullish structure. This high was unsuccessful in taking out this low or this low, therefore it should be weak and should be used as liquidity to be run, which would basically mean that we're going to take out all of this more buy side liquidity, taking out all these highs if we're going to continue moving to the upside. Do I think it's going to come to the upside in that much? Probably not, but let's just dig into price action here. So what we can see is we have this large impulse in price. We can see that we've cleared these highs and we're basically tapping into this area here. But if we're just kind of focusing on the fact that price is bullish, on a lower time frame, this is a change of character to the bullish side of things. We are bullish on the larger range, so buys make sense. You could look for sells as well, but the main area to be looking at would be somewhere around here. The fact that we have this level of imbalance is definitely indicative of the fact that we're bound to find something that resides within here, more than likely a zone to look for a trade. And obviously we know based on the price action here that that price did in fact move to the upside. So this is basically just a hindsight explanation. But if we're looking here on the 15-minute chart, what we can do is just refine this imbalance a little bit cleaner. We can see that we do have a 15-minute zone right here. We wick below it, so this would have been the initial kind of area of interest, actual area of interest, I should say, to be looking at, because obviously we're not trading imbalance directly. It's not something that I recommend doing. Of course, you can look at areas of imbalance to look for potential trade ideas. Look for zones that sit within it, because what imbalance is, in probably the easiest way I can explain it is, in this case, price was moving up so quickly that it really wasn't offering the opportunity for buying and selling to happen at, we'll call it fair exchange. So in that event, what usually happens when we see these large imbalances is that price will eventually come down to fill it. Now, whether you believe that the market is rebalancing price to offer fair value is a whole different story. But at the end of the day, the explanation is this, that there are a ton of orders that would be sitting here for various reasons. Either they were skipped, whether they're buy orders, sell orders. And at the end of the day, price is more than likely gravitating towards those areas to fill those orders and then continue pushing for the next area of liquidity. So now that we're got that out of the way, let's take a look at something like this. We have a demand zone. This is our initial kind of refinement that we can use here on the 15-minute chart. Now what we can do is we can refine that a little bit cleaner. On a 15-minute, it looks good. We'd be looking for our confirmations in here, and that's where you can stop. We can go down to the 1-minute chart and start looking for confirmations. We can start looking for a change of character. We can start looking for an entry of sorts. But what we can also do is we can inspect what's happening down here, and what we can see between all of this is we have 1 minute sell to buy or pivot price action where we get a heavy sell followed by a massive move to the upside. But what we can also see if we just look right here is we can see more imbalance. So we kind of have double imbalance, if you want to call it that. We have higher time frame imbalance, and then as we navigate down to the lower time frames, what we can see is just more of the same, more imbalance. So if we go to the 15-minute chart, this is where that imbalance exists. So if I just go back out, we'll go back to the 4-hour and just repeat this one more time just so it's clear. So we have, this is our 4-hour imbalance. We go down to the 15-minute, which encapsulates this entire price. All of this is now efficient. It's been filled in except for this area right here. And as we can see, all of this is efficient too. So, whoops, if I go back and put that back on. Now when we go to the 1-minute chart, for instance, what we can see if we zoom in very clearly is on the 1 minute. We have this big area of imbalance, and what we can see here, although it's a little convoluted, is we have a pivot demand zone right sitting in here. And what we can do with this is we can actually map that out and bring it over. It's so small, I'm having a little bit of difficulty grabbing it. I could just make it bigger, but I've already committed to doing it this way, so we can embarrassingly watch me drag it over. So what we can see is there's no coincidence that price reacts to there, and it's really just comes down to the process of digging into price action, so to speak, asking the question. So basically what we've been able to identify is the fact that imbalances existed on the higher time frame all the way down to the lower time frame, and we were able to find a particular demand zone that exists within it. Now, of course, if you're trading on 1 minute confirmations, you are more or less looking for this high to break before you can actually get involved in the trade. And what we can see is, once we finally get that bit of price action, price never actually returns to this area. We could argue that there's something here on a lower time frame, sure. But what we can do is go down to something like maybe a 15-second chart, to get actual information. Because if I go back to the 1 minute, what we can kind of see within this bit of price action is there is a change of character in here. From a fractal perspective, something around these lines, that's what would prompt the trade. We'd look for our entry right here. You can read it on the 1 minute, but it definitely becomes clearer on the seconds charts. So if we just go back to the 15-second here, again, what I showcased, we have a break to the downside. Let me use a line actually to make life a little bit easier for all of us. Got a break to the downside, got a break to the upside, move to the upside. If we want to get a little bit specific, what we have is we have supply sitting in these wicks right here, and then we have demand basically resting within this down candle right here. You can see that we create a little doji, so if you want to call that a liquidity sweep, you can. Personally, I wouldn't really call it a liquidity sweep, but then you take your entry on the there, 1 pip stop if you want. You can even go just a little bit bigger, give it some room to breathe. And where would we be targeting? Well, like I said at the beginning of all this, our targets, if I can find my let's make this a little bit bigger. Go to the 1 minute. Here we go. Initial targets would probably just be these more local internal range liquidity highs. But if we're looking at it on, say, the 15-minute chart, this high would be a good target initially. If we go to the 4-hour, the expectation of this particular trade, again, if I make this a little bit bigger, is to then basically be targeting these highs and, more specifically these highs after price action continues moving to the upside, if that's what it chooses to do. But effectively, all this is just looking at imbalance, understanding the fractal nature of the markets, and playing within that. If you were looking for a 1 minute entry, the best one you probably would have gotten, if I just delete that, is something around these lines. Put that there. What we can see is we get a little bit of a change of character here, break the low, break the high, or if you want to get a little bit bigger, we could put it here, or we could even put it here. It doesn't matter how you classify it. At the end of the day, we end up doing a break of structure, and we create a move. It basically fills in all of the imbalances a little bit that exists here, but if we just kind of move this here, all of this has been filled in, so we can put an order on here, 2.5 pip stop, maybe even cover the lows, go 3 pips. Again, we can move this to the upside, go to the 15-minute chart, targets, this first high, and then again, our larger target is going to be something like that. So obviously, if we're looking at more of a seconds entry versus this more 1 minute entry, the risk to reward is obviously going to be a lot higher on the seconds chart. But of course, if you don't trade the seconds, if you don't have the seconds, I wouldn't worry about it too much. If you start getting really comfortable with, I don't know why this is so big, if you start getting comfortable with understanding the fractal nature of markets, you can begin to spot changes of character on the 1 minute that are actually on the 15 second. The only thing that you might have difficulty with is actually looking at the zones. But again, if we just look at this price action and just dig into it a bit, we have a move to the downside, we have a move up, we have a move down, and then we have a move up that breaks structure. We have basically this entire range. We've broken these highs, this high, we come down, and then we come to the upside. What is that showcasing? It showcases a change of character. It shows demand becoming in control. We've tapped off of an actual point of interest. This is why this logic would make sense. Of course, if nothing was there, we probably wouldn't use it. Of course, again, if you look to the left, the demand zone is a little bit obscure. If you didn't notice it, it's probably not a big deal. Personally, I'm not trading, so I wasn't watching it today. I probably wouldn't have taken that zone if I'm entirely honest, but it's totally a valid zone. But again, it's about applying the higher time frame context. We had that imbalance. We were able to refine that down. We noticed a 15-minute POI, but there was also imbalance underneath it. Chances are price is going to liquidate that. And on the 1 minute, then we can see more imbalance. We can also see a demand zone, which is pivot demand. Then we're able to break this down. We're able to look at the structure. On the 1 minute, we can see that that a change of character has actually taken place. Let's just see if I move this over to see if, yeah, you can kind of see it here as well. Just kind of beating a dead horse at this point, but here's your change of character. There's your zone, moves to the upside. And what you can also see on the 1 minute, there's technically another entry that you could do, would be something about right here. Not really the best supply zone, if I'm entirely honest. You could put something like this. Nah, that wouldn't even count. Never mind. Because with this supply and demand zone flip, you'd want to actually see some sort of true reaction. I'm sure if I maybe go to a 5 minute, I'll just take a peek. I'm just kind of looking at this for the first time today. We can look at something like this, go, okay, that's a 5 minute zone. Go down to the 1 minute. What does that look like on the 1 minute? Yeah, you get a reaction, but since then the zone's taken. So in essence, that first trade on the seconds is probably your best bet. That fits the entire model, the chalk, the flip, and then, the entry. But if you're trading more of a conventional model, what we can see is now we're starting to see a break of structure. We're still, from a structural standpoint, stuck between this range. We're bearish. We've had our change of character, and we're starting to see structure shifting from bearish to bullish. Again, this could be just a complex pullback. So initially, we'd be looking at supply zones, even just this larger range, which would be a 5 minute POI, to see how we react. And what we can see is, we create some liquidity, we sweep it, and then we continue to the upside, which basically interacts with this range, which again is a 5 minute POI. So with all that said, you could trade this to go move to the upside. You could look at this entire range, from this high to this low, say that this is inducement, take an entry here as well, depending on your model, depending on how you view price action. If you look for chalks and flips, then yeah, obviously none of this would, really satisfy your trade plan. If you did something like this, just draw that in, got a supply zone. I'll put that as supply just so that we're kind of following colors and things. Look at something like that. It would be our doji, which would be a demand zone on a lower time frame, so a seconds time frame. You could put an entry here. You'd want to cover the low here and maybe a little bit below. This is where, again, it comes down to a little bit of discretion on your part on, how tight you want to run your trades. Do you want to, be as tight as possible? Chances are then, what's going to end up happening, you're going to get swept just a little bit. If you go with a 2.5 pip stop, you might stand depending on spreads. Chances are you're going to get stopped here. If you take an EQ entry, again, with, more of a 2.5 pip stop, you're probably good, because one thing to factor in is a little bit of imbalance there. Chances are you might get spreads that'll tap into those areas, kind of seek some of the orders that would rest in below that area. And what we can see from this, really, if we're just looking at it from a conceptual standpoint, we have demand zone being respected, demand zone being respected. We have a larger demand zone being tapped into. Well, it's not really a larger demand zone. We have a 1 minute demand zone that's filling inefficiency. We had this 15 minute zone. We did spike below it, but then what we've seen is we're tapping into actual structure. or supply and demand zone on the 1 minute, which is sell to buy wicks or a pivot demand zone. We're starting to see, our change of character on a seconds time frame that we can kind of see on the 1 minute. It's a little bit loose, but again, if you don't have seconds, you can interpret this as a chalk if you have enough experience, and it just comes with understanding the fractal nature of structure of candlesticks, things like that. So you can start to look at all of this, because what we can see is this zone is just this wick right here. Everything's pretty efficient up until this point, and then that's where we get the real momentum in the markets. We come down, we tap in, we continue, break to the upside. We have another demand zone here, and we respect that. So we're starting to see demand chain starting to take place. We get another zone right here, which again, I spoke about as an actual flip zone. We get a reaction, this reaction gets swept, but then this sweeps all of that. So whether you stayed in that trade is a different story. But what we're starting to see is we're either starting a demand chain because we're going to continue pushing to the upside. We're also starting to see supply failing, which is a good sign. Sorry, I'm getting the hiccups here. Which is a good sign. And then what we're seeing is now we're starting to see a lot more internal range liquidity that's happening here on the 1 minute chart getting taken out. And then that's when we see the market absolutely release. So basically, if we're looking at demand chains or supply chains, they're there for one of two reasons. They're either there to build liquidity to then push price in a particular direction, continuing with that chain. So we built a demand chain, and then once we got enough, we continued to move to the upside quite rapidly, or we build a demand or supply chain to use as target for liquidity purposes. So it's one of the two things. We don't necessarily know the outcome unless we can build from the higher time frame. Obviously we started to have an inkling that we're in a bull trend still, even though we're in a larger range. Chances are the buy side liquidity could likely be attacked or raided or run. We've seen some imbalance, things like that. So we're starting to build all these confluences, this framework of understanding kind of how this price action is coming into play. And then we're just following price through. We see a really nice impulse. We can go to the 5 minute chart. We can look at maybe this zone here. We just miss it. So let's just take a look at price action again. What we can see is we get the change of character that's kind of just in imbalance. So probably not the best trade to be taking, because you don't necessarily want to take a chalk in the middle of nowhere that doesn't actually tap into a higher time frame point of interest. But what we can see if we're just looking at this, we sweep liquidity. We do build a POI that changes character and starts to break structure to the upside, because if we're just looking at price action here, we have this, or even something more like this, change of character to the downside. We have a POI that's starting to show bearish price action. We're starting to fill all of this void. Really the only key point of internal range liquidity that needs to be taken here, if demand chain and demand is going to stay in control, we just take out this level of internal range liquidity before we attack this level external range liquidity. What we're starting to see is we do have a liquidity void. We had one right here, which is now filled. We're just basically filling from one void to the next. If we just kind of zoom out, we have a much larger void that's been filled. We're creating a new void, and it's just the building of internal versus external range liquidity. Demand is in control here, so now it's filling those voids, but it has to take out some internal range liquidity, which builds the move to then fuel further demand chains, and then price continues to move to the upside again. We're starting to see bullish price action. Price taps into this zone. You could call these set of equal lows some form of inducement. It's pretty high up in the leg, but it definitely could be classified as that. And as we can see, price has been moving to the upside, and is starting to obviously correct back down now that liquidity and volume is going to start to taper down for the remainder of the day. Obviously, it is Christmas Eve tomorrow, and the markets are going to start to slow down a little bit. There's still obviously going to be banks and institutions and things like that trading, but overall you're going to start to see slowdown in price action. There's going to be setups, but it's about employing proper risk management, not swinging for the fences, not going on the daily chart and being like, well, I'm going to buy here, and I'm going to be looking to take out these highs, things like that, because realistically it's probably not going to happen this week, maybe not even next week. Probably wait until the new year. Anything could happen in the markets, we've seen that time and time again, but that's pretty much it. I hope this was insightful. Hope this was helpful. This was just kind of me looking at the chart based on the conversation that was happening in the Euro US dollar chat. Again, we talk about all this stuff on a daily basis. We showcase it every single day. It's taught, it's preached, it's practiced here inside of Phantom. So I hope that explanation was helpful. Obviously we don't really dig into imbalance as much recently as maybe we should, because it is a powerful and important concept if used correctly. You know, it really comes down to understanding the higher time frame intentions, you know, understanding where price is likely to go, especially if we're in a large range. We can use imbalance as areas of interest that go alongside price action. You know, we want to start seeing demand or supply being put in control or taking control, and we want to make sure that, you know, we're starting to see those price action confluences. So again, if we're looking on this 1 minute chart, you know, taking that initial entry, yes, it would have provided you with an incredible risk to reward ratio. You know, you would have got in and been absolutely smiling, especially once price hit around these levels. But in saying that, you know, if you don't have the second charts, you don't trade the second charts, or it's not per your plan, you wouldn't have taken that trade, which is totally fine, because there were a couple other opportunities to get involved and still make some really great percentages. And it really just all comes down to your trading plan, how you interpret the markets, and really your risk tolerance. Because obviously if we're taking entries down here, especially on this 1 minute zone, it's a little convoluted. You know, we're just looking at very fractal price action that's deeply embedded within a larger time frame imbalance. You know, there's no true confirmation that price is actually truly going to respect it. That's why the change of characters is, you know, incredibly important. That's why if you start to see demand chain starting to take place, supply starting to fail, then you're starting to really look at, you know, higher probability trades and trading ideas, you know, that kind of made all this price action today super nice for those who did trade euro to US dollar longs, you know, in the New York session. But yeah, hope that was helpful. Cheers.